Hello everybody, Nathan the F&I guy here. Going to talk to you about how to fill out a uniform residential loan application. The reason I'm touching on this stuff is I also do real estate on the side, but essentially a uniform residential loan application is a standardized form. So you can see it looks like this. So filling it out can be kind of daunting. They ask for a lot of information. Just from doing this for quite some time in my past, a lot of the information you don't really need. I'm going to highlight on the stuff they absolutely need to perform their application and get you approved. Generally, they're going to tell you you need to fill out everything in as much detail as possible, but I'm going to touch on what I think is pertinent in order to get you approved. So at the top there, it asks what type of loan you're going to apply for. If you don't know that, don't worry about it. Your case number, lender stuff, that's all stuff that's internal, but they list it on the form because this is the traveling document that identifies you and also has the structure of the loan and how your personal finances are in reference to the application for the loan. So think of this as the guidebook for them in order to get you approved for a home loan. They're going to ask the subject property address. Most times you might not have that because you're in a pre-approval process. The purpose of the loan, what are you going to do with it? Are you going to purchase a house, refinance, new construction? What kind of residence? Will it be an investment property, a primary residence, or a secondary residence? Primary residence means it's your home where you're going to live. Secondary can be over 50 miles away and can be a secondary residence. An investment property is purely for investment. The reason that's important is because different types of property ownership reflect different interest rates because it has a direct correlation to the risk for the bank. Also, what is the required down payment is correlated to the type of property you are purchasing. By that I mean a primary residence, you're going to pay less down payment or be required to than an investment property. The next is if it's construction, asks you a section about the construction and how much you're borrowing and when it's going to be built and so on and so forth. So I'll kind of skip over that. How are you going to hold title? Don't worry about that. Generally that's reflected in the buy-sell or the contract to purchase the property. Borrower information. This is going to be all the detailed information about you and the co-borrower. Your name, social security number, birth date, all that kind of information. Dependents. Do you currently own? Are you married? Basically, they want a background on you, and the reason is the 3 C's. You have credit, collateral, and character. This application is going to reflect your character. The collateral is the property, and your credit is pulled by your credit report. So what we're doing here is building your character so that you can basically on paper show the bank who you are, what you represent in terms of money and assets. On top of that, they ask for your employment information. How long have you been employed? Generally, they like to see a 2-year job history. This shows stability for them. Next is continued employment info. If you switch jobs, are you self-employed? That kind of stuff. And then it's going to ask for all your monthly income and combined housing expense information. This is basically a breakdown of how much money you make and how much you have going out. As if we were a business, you'd say accounts receivable and accounts payable. And the idea here is they can get a snapshot of your monthly income. Generally, banks don't like to lend over 40% of your gross income. Now, this is very deceiving because we all live in a net world, and by that I mean gross is how much you make as a whole pie. Net is the number of slices you get to actually bring home, after you pay the government their taxes. So in most cases, if you make $10,000 a month, you're going to pay $4,000 in taxes and bring home $6,000. Well, they want to see, of that $10,000, no more than $4,000 going out for bills. It's what they call the debt to income ratio. So this gives them a snapshot of how much you're paying in taxes. Next is assets and liabilities. How much money do you owe people for things like, cars, boats, installment loans, student loans, that kind of stuff. And then other assets you have, 401ks, stocks that you own privately, anything that you would put down as an asset. Mostly they're looking for liquid assets, things that you could sell the next day if you had to make a payment. Their idea there is the more liquid capital you have in the bank or investments that you have that are liquid, the better it looks to them because they like to have reserves. Reserves can be anywhere from 3 to 12 months, and they want to see them in the bank so that they know if you lose your job, you have some reserves to make payments on this loan until you get a new job. The idea is they want to minimize their risk and they want mitigating factors, and those things include things like reserves and liquid assets you have in the bank. So that's usually 2 pages long. Then it comes up with a total liabilities and total assets. Generally, we call that your net worth. You'll have a gross worth, but you take away what you owe everybody, and that's your net worth. When you get down to the end of that, there's the declarations. There's some important questions there they're going to ask you. One of them is, do you have any outstanding judgments against you? Have you declared bankruptcy? The idea is they want to know this stuff up front, because those questions generally will disqualify you from getting a loan in most cases. Now, that's not a rule of thumb, but they ask them because it's very important information. If you're party to a lawsuit, they'd like to know if you're a liability when it comes to lending you money. So furthermore, there's more declarations. I won't go through them all, but you'll see them on the application. Details of the transaction is going to kind of outline the structure. Are you doing subordinate financing? By that, does it mean, are you getting a second loan? Are you borrowing the down payment? That kind of stuff. Generally, they like to see the money seasoned that you're doing for a down payment. Seasoning means it's been in your account for X number of time, and they can source where it came from. The idea being they don't want drug money and that kind of stuff being used as a down payment for a home. Now, if it's gifted from family and friends, it has to have a gift letter generally, and they write a letter saying, I gifted my son so-and-so amount of money in order to purchase a home. The idea is they want to be able to source the funds and know where you got it from. You get to the acknowledgement, which has a big disclaimer, and at the bottom you sign and date it. I generally advise people to always read the fine print. Don't expect somebody else to do it for you. It's your responsibility to know what's in the application. Beyond that is Section 10, which is information for the government monitoring purposes. You can furnish this information if you'd like. You're not required to. It's completely up to you. What it does is ask about some of the protected class information so they can track to make sure people are being equally borrowed to when it comes to receiving finance. Below that is just how the app was completed. And this is a standardized form, so you should see it be the same from everybody that you apply for financing with. You always have to sign the bottom of the forms, and they also usually include instructions just to let you know how to fill it out. So hopefully this helps, and just remember, if things are too good to be true, they probably are. Have a great day.